And we are live. All right, what's going on, everybody? Welcome to Wolf. Welcome to another podcast. I am super thrilled to be going live with you guys again. And today I've got an awesome guest. Got the CEO of Swan. This is Cory. Cory, thank you so much for being here. You guys are doing some incredible stuff in the Bitcoin world. They are a Bitcoin-only financial services firm based out of California, I believe, offering a total range of services from recurring instant Bitcoin purchases, IRAs, private client services for tons of different people, and educational resources as well. And so I'm super stoked to be talking with you. Thanks so much for coming on.
Yeah, thanks for having me, Cade. You've been persistent. I don't do a lot of crypto shows, as you can imagine, but here I am.
Absolutely. Well, I appreciate making the time. So for people who aren't aware, if you could give like a little bit of a breakdown on what you guys are offering over at Swan. So like I told you right before, there's a lot of people, including myself, who started from a more crypto degenerate world. I even came from the NFT. This is like the most degenerate part of crypto land. And then slowly finding my way, watching a lot of Benjamin Cohen, getting sort of sold on the orange pill movement and more of a Bitcoin lean. And so I think a lot of people also watching the entire altcoin craze, the cycle getting just not even really comparable to the Bitcoin run that we've seen. A lot of people are starting to move into the direction of Bitcoin. And so something like a Swan that comes into a lot more into the interest, I think, of even the common person. And they're like, okay, who are the Bitcoin only companies? So I'd love for you if you could just do a bit of a breakdown for you guys.
Yeah, I mean, saying the quiet part out loud, most people are finding out what all the crypto insiders have always known, which is make as much money as they can in crypto and then store it in Bitcoin, right? Like the EOS sale was like $4 billion or whatever, and they're all hanging out in Puerto Rico, your neighbors. But all they did with the money was buy Bitcoin. They dump the EOS and they buy the Bitcoin because Bitcoin is the harder money. So it kind of makes sense. As far as Swan, I would say the USA's #1 Bitcoin-based wealth platform. So you named some of the services. We also have asset management. We have asset-backed loans. We have collaborative custody with Swan Vault. We have a lot of private client events and webinars and things like that. It's just really good to have somebody that is a Bitcoin expert that you have on speed dial that you can talk to on phone or video, pretty much whenever you want. And it's a lot of the top Bitcoin experts in the space, people that are on TV talking about Bitcoin. Like that's our sales team. Your relationship manager is somebody that is credible. You can see their proof of work on podcasts, on Spaces, on Twitter, on CNBC, et cetera, before they serve you, which I think is a pretty unique value proposition.
Definitely. And I want to get into a little bit of the vision of you guys. What is like the core vision behind Swan specifically? And has it changed at all from when you guys originally had launched? I know you guys are Bitcoin only, and you guys have made that definitely clear. So what is like the core vision there?
Yeah, it's interesting. I think, our mission from 2020 at launch was basically to make it so that Bitcoin couldn't end up in an adverse scenario with the US government, primarily the State Department, kind of doing the boots on necks thing. And so that was all around trying to spur as much as possible, 10 million Bitcoiners, an intransigent minority of people that would stick up for Bitcoin, that would care, that would be noisy. And, so that was a very defensive posture and trying to sort of do it from the ground up. And then what's happened with the launch of the ETFs, what's happened with sort of the collapse of, pretty much all crypto narratives have been sort of uncovered as kind of, not having any clothes on. And then obviously Bitcoin became a political football and became something that was very popular to be for, because it's really hard to be against Bitcoin, because just kind of with a modicum of research, anyone that examines the claims of somebody that comes out anti-Bitcoin, it's just a losing proposition because you're going against truth. And that's a really hard position to sustain. So you just end up looking like a political shill, or like you're playing games or something. So, being pro-Bitcoin in politics is, well, it's actually a trump card. Interestingly, is one way to say it. So I think with the political groundswell that started in probably May of 2025, there was a little bit of seeding from RFK2, who kind of pulled Trump in that direction. And, he saw that it was popular for RFK2. And then that was kind of enough to get him and his team to take a look at, should we be pro? And then they realized that if you also came out pro crypto, not just pro Bitcoin, then your campaign donation coffers would be filled. And that's basically what happened ever since. Is, they've been open for business, and all the crypto people have been, buying their way out of jail and buying their way out of cases and, buying new laws. It's just been kind of like almost a year now of just aggressive regulatory capture. So everybody kind of gets to escape, if you look at it that way, from the criminal side, or exist if you're looking at it from the people that believe that they're doing something of value. But the other thing that's happened is just between the two new tops of funnel, whereas, traditionally, I'd say from, probably 2017 till 2023 and into 2024, crypto was still the biggest top of funnel for Bitcoin because of all the aggressive marketing of the crypto casinos and trying to say that Bitcoin was just one of these cryptocurrencies and you should have a basket of them. And, the Winklevi trying to show Bitcoin and link to Portnoy. And, it was always about diversification. And, even back then, Bitwise selling like a top 10 cryptos index and things like that. And so I think with the rise of MicroStrategy and the rise of the ETFs, especially, I think IBIT being so massive from BlackRock, and then the FBTC one is really big. And then I think, I don't know if Bitwise is 3 or 4 or whatever, but they've also just had an outsized voice. So I think just being on the road, I don't know how many presentations Matt Haugen did to institutional investors in 2024, but, got to be one a week, something like that. So, it basically made the top of funnel Bitcoin linked, paper products essentially. So, but they're at least talking about Bitcoin. So the top of funnel is now orange instead of brown. And it's, it's these ETFs and it's traders and stock investors getting interested in what's gone on with MicroStrategy and Semler and MetaPlanet and, whoever else is coming in to the leveraged Bitcoin equity playbook. And that has made what we do, we don't need to go after kind of somebody that's coming from a standing start and try to get them to buy Bitcoin instead of crypto, because they're already buying Bitcoin. We're just grabbing people that are, getting interested in MicroStrategy or are messing with some ETFs in their brokerage account. And inevitably, a large percentage of people that get into Bitcoin through those paper products, a lot of them find a Bitcoin podcast, or they get some follows on X and they discover, Lynn Alden, or they, find a Stefan Livera podcast or whatever it is. They go down the rabbit hole a little bit. And then that generally the internet will point towards Swan. Right. So that's where we just get, kind of, I'd say we used to be more top of funnel and we used to serve more kind of entry level people. And now it's much more about the Bitcoin investor. And those are the people, once your Bitcoin exposure ticks over 0.5% or 1% of your liquid net worth, that's when you want to be served by an expert. And that's when you need more products. And you're thinking about, okay, I want to put Bitcoin in an IRA. Oh, I want to set up this trust account. Oh, I want to buy some for my business. Now I want to access some cash, but not pay cap gains. So I want to do an asset backed loan. Oh, shoot. Like I bought a bunch at 108. Can I do some tax loss harvesting right now? Like, how do I think about that? I want some advice on some specific lots or some, some HIFO versus some LIFO, that kind of stuff. So it's really just looks a lot like traditional private wealth management, private client services for an asset manager, but it's just all Bitcoin related.
Got it. So did the recent, the GameStop saga is the first one that comes to mind of massive company who's lights come on, they're like, oh wait, this is definitely a move. And GameStop's obviously got a massive audience of people. And about half the aisle I saw was this is just the start. They're gonna push that domino over. The dominoes have already been kind of falling, but they're a big fish. Other people are saying, no, this is going to end and it's going to be an absolute disaster for GameStop. Their stock's going to go down. People are going to stay away. Either way, we're seeing massive names out there taking Bitcoin seriously. I guess my first question was, did that surprise you at all that these companies are moving in 2025? Do you think it might happen a little bit later, or is this about right?
I mean, it feels like we're probably on track or a little bit behind what I had expected for price development. I thought we'd be firmly in 6 figures and not see 5 figures again by, call it April 14th of 2025. So in that respect, you never quite know where the next big push is going to come from. And, there are rumors of other big companies starting a Bitcoin treasury strategy. Specifically about GameStop, I don't see them going whole hog on a leveraged Bitcoin equity strategy the way that MicroStrategy does. I think they've bought Bitcoin or are buying Bitcoin for their balance sheet, which has benefits, but does, that makes you like a Bitcoin treasury company, not, and people are struggling with the definitions of these things, but
Yeah.
I'm finding it useful to call companies that have a lot of Bitcoin on their balance sheet as a Bitcoin treasury company. And then the ones that actually turn their treasury into a business unit essentially and leverage capital markets to acquire as much Bitcoin as possible, where their key performance indicator, their KPI going forward is Bitcoin per share, BTC yield, those kinds of things. I think that is a very different thing. And there's only a few companies doing that. It's basically MicroStrategy, MetaPlanet, Fold, Semler, and I know there will be more. I think there's one starting in Brazil. I think there's some blockchain company over in Europe that claims to be doing it, but the branding is obviously twisted. So yeah, I don't see GameStop going whole hog. I don't think they have the DNA for that. I don't think their shareholder base is probably prepared to go fully orange in that way. That would be my guess.
Yeah.
So I think it probably has the benefits that Bitcoin has on any balance sheet, which is it makes it more resilient. It's likely to rise in purchasing power over time. It's a very, very scary thing to short.
Yeah.
Like it makes it,
Oh yeah.
Probably just off the list of quite a few hedge funds. If you have a lot of Bitcoin on your balance sheet, your ticker is probably off the list for shorts. So, that alone is probably a good reason for them to pick up a fat stack of Bitcoin.
Yeah. I'm curious as well. You've got a pretty solid, traditional finance background. You probably know a ton of people in there who are contemplating Bitcoin at this very moment. You were at Google, McKinsey, Microsoft. I'm curious on how that more traditional landscape, I guess, helped you eventually come over to Bitcoin, but also what do you think the things that TradFi is missing? Like there are a whole multitude of people, especially on crypto Twitter or Bitcoin Twitter and crypto Twitter, who are discussing all these various assets that they can invest in. And every now and then we'll be in a Bitcoin space and we'll have one of the TradFi guys roll in and it'll just be this huge war basically between, like the Bitcoin guys and the guys who get Bitcoin or they say they do, but they've got some massive stipulations when you compare it to something like gold. What do you think that what do you think that they're missing from their perspective? Like, why is it that some people are fully into Bitcoin when they compare it to gold, and some people are like, I don't know if I could even constitute a 0.5% allocation.
A lot of people who are involved in managing money, let's say, so you're running a portfolio or you're managing money for other people or whatever, and that's kind of who matters when you're talking about Wall Street, right? So a lot of my classmates from my Chicago MBA 21 years ago, my degree can drink now.
Let's go.
Awesome. So look, let me tell it through a story. So I had dinner, our family with another couple families, and one of the other dads was basically a commodities advisor, I would say. And so he, puts a bunch of 70 to 85-year-old boomers out of stocks because they're close to the end and should have a fairly conservative portfolio, and he puts them into commodities. So he's putting them into, a lot of gold. I don't know what else matters or counts in that. There's probably hedging strategies, and he's basically just trying to achieve like a really conservative, low downside, probably, yield bearing instruments, kicking off 3 to 5% cash, or I don't know, maybe it's more than that, whatever it is. So he's been in this game for a long, long time. And he was also in the financial press for like 20 years prior to that. So like he really is, this has been his career for 30 years. And he should be all over something like this that's making as much noise as this. And that has, Stanley Druckenmiller and Paul Tudor Jones and Bill Miller and Larry Fink and Abby Johnson, so gaga for Bitcoin. And he hasn't ever taken the first step and has like a mental aversion to even considering it. Because I think it just sounds like work.
Yeah.
And it just sounds like something that's kind of scary, and he just hasn't done it. And his clients are now asking him about it all the time. And, and his wife kept on chiming in and saying, we want some.
Boy.
Like, we'll call you next week. Like, I wasn't pitching at all, by the way. I don't care about like a single client, especially in my social circle. But yeah, it was really interesting. And he didn't know anything about Bitcoin at all. He was like, I don't know why anybody would store their money in an algorithm. I was like, oh, it's not really just an algorithm. We could probably send you some resources and
Yeah.
get you up to speed a little bit. But yeah, I think it's just it's actually willful ignorance, I think, is the summary of that. There's an aversion to it because it sounds like a lot of work, and a lot of people have put in a lot of time, becoming experts, and now they're like 10 years behind. What they don't realize is that you could actually probably get up to speed in like a month if you actually went hard at it, because the resources are so much better than they used to be. And I tried to make that point. I was like really, honestly, like 10 hours, because he's so smart in so many ways, like 10 hours, you could basically get there
Yeah.
and be able to, converse intelligently about it. And that would probably be enough to make you want to do another 90, and then you'd be at 100 and you'd probably be fine.
Yeah.
For all intents and purposes, you're probably fine at 100 hours of studying Bitcoin now. Probably used to be like 1,000, because it just wasn't as clear and the explanations weren't good and the analogies were terrible. And there was so much noise from all the people that didn't understand monetary history and monetary theory, and they were pushing Bitcoin for payments, not understanding how the world actually works, etc. So I think it's much easier to understand now.
Yeah, I will say that's been actually a topic we've cracked open in our spaces. The idea, Satoshi's original vision is peer-to-peer transactional currency that allows for this freedom, and versus now where a lot of people are like, well, I think for that vision, maybe we need to put to rest because it's way more of an asset to hold long term. Is something comparable to, well, it's very hard to compare to anything because of the nature and characteristics of Bitcoin, and they're just so unlike anything else we've seen. It's almost too different.
It's not about putting it to rest. It's just out of order. It doesn't make any sense for me to want to spend Bitcoin right now or sell Bitcoin when I expect it to continue to be the fastest horse in the race. Right. And so, that's where it is for basically everybody. They spend anything else other than Bitcoin.
Yep.
So there are situations where Bitcoin is the best job. It is the best tool for the job, and it's crushing it in those areas. But I would say even for international remittances, most of the time there's people on the other end that want to receive dollars. So stable coins are dominating there. We obviously have a bunch of Bitcoiners that work for us and vendors that love Bitcoin. And so a lot of our payments around the world are in Bitcoin. But that's because both people want that. But even then, it's kind of irrelevant. Like if it were more expensive to send Bitcoin than to send, if it were materially more expensive to send Bitcoin than to send Tether on Tron, we would send Tether on Tron if it was way, way cheaper and they could just buy Bitcoin on their end. But what really matters is what people store value in. And, store value, you have to have a money be a widely used store of value that's storing a lot of value and has a big network effect before people are going to want to start spending it. And probably their expectations of increasing purchasing power over time should be diminished. So you should see basically, I don't think that you'll see a lot of spending of Bitcoin in the West, like the Western world, until you have, at least $1 million, maybe $2 million a coin. So 20 to $40 trillion market cap.
Yeah.
And that's when you'll really start to see, medium of exchange for Bitcoin take off. But it's in there. It's in the protocol. It's in the functioning. Like there's no question that with Lightning and Arc, I mean, the way that Arc is now working with Lightning, some of the demo videos that are coming out the last few days, like it's pretty wild and pretty awesome. What you're going to be able to do with true, actual, sovereign, unilateral withdrawal, real layer twos, not all the fake crypto layer twos that say the word Bitcoin, because those are all bullshit. But we do have Lightning, and it's been growing for years, and we have Arc, which is taking off. And then you'll probably be able to do a lot of your crypto DeFi, AMM, gambling fun things with BitVM, which is also a true layer 2, and it's super early. And, but there's smart people working on it. I don't give a shit about that stuff. I think, most of that is probably priced better. When you're thinking about in size, it's priced better when you actually know the person that you're dealing with and something about them. But there are a lot of people around the world that want to have privacy, or they have like local tyrants or whatever. So having some financial tools and being able to access credit and things like that, and do it in a self-sovereign way on a true Bitcoin layer 2, that's probably where that will head. And in case you're wondering, any project, layer, whatever, that has its own token and does not have unilateral withdrawal, meaning you have to ask permission from somebody, is by definition not a layer 2.
Interesting. Okay, that's a pretty good bar right there, actually. That's good to know. I think for the audience. You actually mentioned something that made me think. Hadn't thought about it before, but anytime I send any money, obviously my brain is like, okay, triple check before you send anything. And once I moved into the crypto world, said the same thing. It's nerve-wracking sending Solana or any other token. But then it came to Bitcoin. Bitcoin takes a little bit longer. It feels heavier to send. It feels very scary to send. So that's interesting you brought that up. And also that you were like, I don't think I'll be seeing too much transactional stuff going on with Bitcoin until it's worth a little bit more. Could you dive into that a little bit more, actually? Because it just got my brain thinking a little bit when you had mentioned that.
Sure. So I guess the development of a monetary asset historically starts as a collectible. It's something that people want to collect, and then more people collect it, and they start to kind of suss out a value for it. And so it was a collectible first, and then somebody bought 2 pizzas for 10,000 Bitcoins, and then they're starting to trade some mining equipment, paying with Bitcoin, and Silk Road took off, et cetera. Right. So now it's becoming kind of a nascent. So they're like messing with it. There's a value assigned with it, and then Mt. Gox comes out, and people start trading it in volume, and then Coinbase comes out, and people start accumulating the heck out of it. People start to see Bitcoin talk conversations between Satoshi and Hal and the crew, and Hal talking about $10 million per coin someday and things like that. And people are like, oh shit, maybe I should take a flyer on this and just pick up a stack. And this is when a lot of the guys that made a lot of options profits in the aughts. So there was like a huge run, call it, 2003 through about 2008, 2009, a lot of Chicago money, a lot of New York money. And a lot of those guys were just good at picking up call options. And so they bought fat stacks. And then you had Wences Casares show up in Silicon Valley, and he was friends with Pete Brieger at Fortress. And he became kind of patient, it was patient 0 and patient 1 of Bitcoin in Silicon Valley. And they kind of orange pilled the whole Bay Area. And then you had, Brock Pierce down in LA, with I forget what it's called. Like, I don't know. There was some kind of like men's group around technology and media. So it was like TMT, or I don't know, TMM, or I don't know what it was, but so basically you had all these executives just picking up fat stacks of Bitcoin back in like 2013, 14, 15. And so there were these pockets of people just, basically making a bet on this thing as a future store of value.
Yeah.
As a nascent store of value, as something that was developing. But, the rise of the Silk Road and so many people wanting to like push merchant adoption was kind of unfortunate for a lot of people that saw it as payments first, rather than understanding that it needs to be a widely used store of value before medium of exchange can take off.
That was me.
Yeah, because it goes collectibles, store of value, medium of exchange, and finally unit of account. That's kind of the progression of money. And by the way, for some people today, already their unit of account is Bitcoin. Before you had stable coins everywhere, all the exchanges, when I got into the space in 2017, people were still quoting all the altcoins in terms of Satoshis. They're like, oh, it's 16 sats.
When was that?
2017.
I just missed that run then. I did not know that.
Yeah. So there were obviously exchanges where you could buy using stables, and there was some, or you could buy just with dollars if you're buying on Coinbase or whatever. But for the most part, there were still only, I think, 4 assets on Coinbase when I got into crypto and Bitcoin in 2017. So most people were trading on like, KuCoin, Bittrex was big until they basically, what happened was so many people came into the space in mid 2017 after the price rise of the first half. And all the usual exchanges choked on onboarding. They couldn't onboard people fast enough, and the only exchange that had built scalable onboarding was Binance, and they actually launched in like mid 2017, and they ate everybody's lunch because they could onboard people really quickly. They just had a faster, better tech stack, and kind of, I think they also, not being based in the US or having, ties in the US, they just didn't give a shit about your documentation, basically. So they just like onboarded everybody with whatever they would send over. So they just kind of ate everybody's lunch. And that's when it started to be more the rise of stables, because I think they kind of denominated everything more in probably Tether as opposed to BTC.
Yeah.
But yeah, it used to be
Wow.
mostly, trading alts for BTC.
That's so interesting. I'm kicking myself because it's crazy that now that I'm in this world, but the first time I even heard really stock and what it was explained properly was I was 19 or 20 maybe is when I first heard it. I remember someone asked me on the way to the gym if I had bought a stock before, and I literally was like, I don't actually know what that is. And he had to explain it to me. And I never I just pretended like it didn't happen. And then of course, my first foray into the finance world was Dogecoin, me buying it off a TikTok video. And then they just went up for, I don't even know why. And then I was thrust into this world. And it's funny because you said something that inspired, or it brought up this story for me when I was, I think this was around the exact time I found out what a stock was. I was in a public speaking class. And one of the guys up there, he was always sitting in the back corner. He had the dark ripped jeans, the big hoodie, always quiet. He goes up to do his speech. Of course, it's on Bitcoin. And the only thing I remember was he looked kind of sketchy, and he was talking about Bitcoin. I believe he led forward first with the transactional, it's peer-to-peer. It's a money you can't control. And that was the main thing he leaned into. And the only thing I could think of was oh, it's that dark web thing to buy drugs. I'm totally good. And I don't remember. He may have said other things. But it is interesting. You mentioned the progression of money and how it's adopted and how people think about it as well.
Yeah.
How do you think okay, actually, no, I saw you were about to jump
in.
No,
look, I think they're perfectly in sync. And I think that Bitcoin is a much more valuable store of value because people know that it can be used as a medium of exchange. And I think the people that really, the vast majority of people that go hard at Bitcoin expect it to become a widely used medium of exchange. And so it may be politically expedient for some people that own a lot of Bitcoin to claim that it's just, digital gold, but they're basically trying to steer clear of the dollar complex and, those that may be in power that are pushing dollar hegemony forever. But it's not what they actually believe. So there's a big narrative actually pushed by Bitcoiners about it. It's cool if it's just a store of value, but it really is that sly roundabout way that, that we get a new monetary system is by just pushing number go up.
Yeah. Yeah, sometimes I wonder because we're in these Bitcoin circles and conversations, and there's a whole slew of people who have not really heard about it, which to me is mind blowing. So I'm it's on TV. It's the President Trump has talked about it. There's a strategic reserve. What do you mean it's not on your radar? But it is coming around. Even my grandfather, who originally was yeah, that's a total scam. And at the point when he had said that, I didn't have it in me, and I didn't have the education on Bitcoin specifically to give a worthwhile argument, because my arguments sort of fell flat a little bit. They just weren't convincing to someone like him. He's dude, I'm used to buying into things that I know have value. Everything you're describing to me, I don't know. It doesn't sound exactly like value to me. And I was well, all the future and the blockchain. It was a way harder. And then one day, someone asked me, they're hey, I'm about to go to a political convention type thing. It's a local thing. How would you shill buying crypto to someone like that? And I was just I don't know if I could. And they were well, what do you mean? You're in this world. I'm yeah, I know, but I don't think I would lead with anything other than Bitcoin. There's no way to make the argument, especially to someone who has no idea about the industry. And that was kind of a light bulb moment for me. And then I spoke with a trader yesterday or 2 days ago, and he's a big stock trader. And so I was just kind of curious to get his thoughts on the whole Bitcoin situation. Are you trading MSTR? What are your thoughts on if this company's buying Bitcoin? He was well, I don't know. He's I don't know if people in the stock world care as much about the fact that they're buying Bitcoin. They're like, maybe that's a good thing or not. He goes, but I do think this Bitcoin asset is probably going to be important. I don't think it really matters what price it is right now. Like, I just need to have some. And like, that was literally his take. I was just like, wow, that's a good take. I was like, that's a really, really solid, simple take. But I think a lot of us could probably do with a simple take like that. That kind of changed everything about it, the way I looked at it. And I've been in Bitcoin conversations for over a year now. And thank God that I was able to get in some of those conversations and really see the perspective, because I basically asked a bunch of people who are in the Bitcoin space, hey, what am I missing? Because there are billionaires dumping in irrational amounts of their net worth into only Bitcoin, but they're not dumping it into Solana or ETH. What am I missing here about the argument? And over like the last year, I finally started to come around to it. And it's been a fascinating journey. And I feel like there's something about Bitcoin that, yes, it's a great asset. There's characteristics about it that are very, very unique compared to other things. But there's also some kind of like a philosophical nature about Bitcoin. And there's people like Tomer and a few others on the Bitcoin Twitter timeline who talk about these things. But I'm curious if Bitcoin also holds a different narrative for you, aside from maybe just the fact that it's a great asset, but anything from like a philosophical sense or ways you think about the world and things like that.
Yeah, I mean, I think it's just, for me, I'm for better or worse, I'm just hardcore rational and like truth seeking. And so any sort of philosophical ruminations, or that may sort of sound like waxing philosophical, is really just thinking through how I think things will actually play out, or could play out, or how I want them to play out. Or if there are negative things, like trying to mitigate things that will get in the way of the things that I want to see happen. So it's more in that respect. To do my best, Tomer impression, or Gigi, Gigi on he used to be on X. He actually is only on Nostr now. Nostr. But he wrote 21 Lessons, which is a beautiful book and has incredible essays. And I feel very lucky to have worked with both of those guys for years at Swan. So there is a lot that changes when you no longer have to feel like you're a hedge fund manager. When you feel like you can just focus on, basically making more money than you spend and putting the excess in Bitcoin. It's very simplifying, and you realize how much of the noise just goes away. And so probably the best thing that I can recommend to anybody is attempt to attain a level of understanding of Bitcoin where you actually have the conviction that it's okay for Bitcoin to be your savings. Because if you get there and you actually truly believe it, it can't just be like a maybe, because otherwise you don't get the benefits. Then you're just as stressed out as you were before. Yep. But if you can put in the time and actually get to the point where you believe for sure, like other people might think you believe, but you actually know. Like, I actually know for myself, as much as I can possibly know anything, that Bitcoin will be around and that it's a great place to store value. And that means I don't have to worry about trading. I don't need a Wall Street Journal subscription. I have one, but just to like look things up here and there. But but I don't need to read The Economist every week. Like, I don't need to have CNBC on in the background. I don't need to worry about this stock or that stock. Like, it's way, way simpler to have an orange portfolio. And you can go on about just trying to add as much value as you can, in this world, and seek compensation for it. And it takes a lot of the stress out of life in general when you just make that switch. Now, when you map that to kind of TradFi, I think you're seeing a lot of people talk about what used to be the 60-40 portfolio, 60% stocks, 40% bonds. They're saying, okay, cool, we'll keep the 60-40, but 60 will be in traditional financial instruments and 40 will be outside the system. So 40 will be like Bitcoin, gold, real estate. Or some other things, right? That are not just things in your brokerage account. And so I'm seeing a lot of people start to promote that. There's whole RIA firms and FAs out there pitching, a new kind of 60-40 now, which is really cool.
I had been watching a lot of Ray Dalio recently. we're having so many conversations about money and the financial systems and the world crumbling, or what do we need to solve it and all this. And I was like, okay, let me find some people on YouTube that I can get even more information on. And just, while I'm on the treadmill or at the gym, I can just listen to these guys and girls just explain and talk about their perspectives. And one thing he mentioned was like a good portion of your portfolio can and should be like the anti-monies, like you just mentioned, like the gold and the Bitcoin. And it's pretty fascinating because, like you said at the beginning of the podcast, you're like, it actually might be considerably less time spent researching Bitcoin and these anti-monies to understand it, especially if you've got a little bit of background in the world, because it's a little bit hard to argue against because of the state of our economies right now, and the state of a lot of the monies are just, it's like a total clown show, it looks like.
Yeah.
And I was watching some of them and I was like, dude. So very quickly from there, I was able to move about 20% of what I have into Bitcoin, which was terrifying for me at the start. But then as soon as I clicked it, I was like, wait, this feels good. This actually feels like something I can feel confident in. I know Michael Saylor talks about the timelessness of Bitcoin that's so powerful. They're like, look, there's not this dude who's 45, 50, who's going to keel over in 50 years that you have to worry about as CEO. There's this Bitcoin at the front of the helm that is just going to push forward, and there's nothing you can do about it. They're like, that should be so powerful for you. And now it's like this amalgamation of all these different conversations, just like all that's this one moment. And then I'm like, okay, I'm locked in now. And it started to make a lot more sense. And it even opened me up in a more positive light to holding something like gold. Because I think at this point, when you're in like your 20s and 30s and you've shifted out of hopefully you're shifting out of like the month-to-month survival mode of like high school, college age. And you're like, okay, now I want to search for something that's going to hold value and hopefully grow. Because if I sit in a savings account, it's earning 1%. If I'm in a high yield, it's earning me 4%. Either way, I'm losing. I need to find something I can trust. And that's where something like Bitcoin, we've seen gold in the last few weeks and months. And well, gold's been ripping for a little bit here, but it's a pretty interesting conversation of like, hey, why are these assets performing so well? And the conversations surrounding them are really interesting, especially for a guy like me, who's like, okay, cool. I'm ready to start entering the game, but I don't want to jump in with this hard-earned money that I've got and then immediately be on the back foot because I chose like the wrong asset.
Mm-hmm.
So
yeah, it's the one that'll be around. And I think, let me make a little, well, first off, let me say, and I think this will be probably surprising for a lot of folks in your audience. I actually don't have any problem whatsoever with some people believing that a digital signature has value, that you can point to, being the person that actually owns, the first version of a piece of digital art. I understand why you were kind of attracted to NFTs. The first thing I ever did in this space was consult to an NFT platform in 2017.
Oh, really?
Yeah. So yeah, that's how I got in. Luckily they were also hardcore Bitcoin stackers and I started to learn about Bitcoin too. But, I've always thought that there could be, fan tokens and, just like unique pieces of digital art. They're not actually unique because they can be copied, but if you can prove you kind of own the first one, I see why there's a market that develops around that. Now, obviously the space was riddled by a ton of scammers and, there's a bunch of false narratives about how NFTs were going to do all the things that blockchain people claimed 5 years ago. And they kind of ran it back, did find and replace on the fundraising decks and kind of did it all again. And it doesn't have shit to do with like artist rights and royalties and all that kind of stuff is bullshit. And all those pictures are crap. But, unique pieces of digital art that you can sell at auction or whatever, like, yeah, sure. Totally makes sense. Don't give a shit. As far as the rest of crypto, it's basically just kind of selling narratives. And I think what you've seen, if there's something that is good that's going to come out of it, it's actually something that I think has been plotted for a long time by Andreessen Horowitz and Coinbase, which is I think they plan to ride this tokenized stock, tokenized equity theme. And they've aggregated a lot of liquidity and a lot of users around Coinbase. And I think they're going to use it as a stock trading venue. And so I think they're working on building a new competing exchange for NASDAQ and NYSE, which used to have 16,000 tickers trading and now are down to about 7,000. So, we know there's kind of market demand, and that was a while ago. There's way more companies now. So I think that you could easily see, 15 to 20,000 companies that are not listed right now trading on Coinbase.
Wow.
And so I think that that's basically the reason that Andreessen Horowitz has been kind of, pushing crypto so hard, it's actually about the infrastructure, not about the crypto tokens themselves. Because Mark Andreessen actually understands Bitcoin, and he, you can listen to him talk about Web3, blockchain, crypto, DeFi, NFT for an hour, and he never says a single thing that makes sense. And he clearly lacks conviction and doesn't believe any of this shit, even though they've put, probably 7.5 billion of committed capital and probably another 20 of SPVs, I would guess. I wouldn't be surprised if they're probably a quarter of the venture money that went into altcoin scams in the last 6-7 years. But I think the end game is all these stranded unicorns that can't get public. Some are good, some are bad, right? That's fine. There will absolutely be some stocks kind of memed into a pump and dump situation, but at least there's investor disclosure, and at least they're regulated by the SEC, and at least, people caveat emptor. You can buy a GameStop if you want to, even if their actual financials suck, because you think that it's going to go up because other people, and you should be allowed to do that. Yeah. And I think it'll be that way with a lot of these, startups and companies, just making it easier to be publicly traded. And I think that's good, as long as there's actually disclosure and you actually are, honest about your financials, and there's, regulators kind of keeping an eye on the scams and making sure it doesn't go too rampant. But that's just like penny stocks, right? That's like pink sheets and penny stocks and smaller exchanges and things. This stuff already exists, and there's nothing wrong with adding more ways for companies to be publicly traded. So I think that'll be kind of the kumbaya moment where we're like, okay, listen, whatever, that was all dirty, but at least we got this out of it, right? It's kind of like financing the rollout of the internet with gambling and porn. It's like it was a means to an end, and now we have a great internet that does, Chat GPT and all this other shit. So that's what I think it's gonna end up being, and that's fine. Incremental improvements to financial IT and Rails and stuff like that. Like, that's no issues with that whatsoever. I have no issues whatsoever with like real world assets. Right? It's adjudicated in meat space. You are going to be KYC'd. They're not going to let this stuff trade around the world like, crypto in 2018. So, careful what you wish for. And then also just be aware that when you have thinly traded assets that you think are going to have liquidity, these long tail things like, half a hotel or, a quarter of a Patek Philippe watch or whatever the heck it is you're trying to sell, that trading 24/7, the spreads are going to be blown way the hell out because buyers and sellers won't be there at the same time. And what you're going to see, I used to have this conversation with a former chief strategy officer of NASDAQ who was looking at all the cryptos and blockchain stuff in 17, 18. And he was trying to create an exchange that would limit the trading window for long tail crypto assets so that they would all, only be open by, maybe we'll do 9:30 to 4 p.m. Eastern time on Monday to Friday.
Sounds like something I know.
Yeah. So that's what's going to happen. If you have too much stuff trading, like none of it's going to be liquid, which is why you basically have adverse selection as far as the assets that are trying to raise money or sell off pieces of it in this whole like tokenization real world asset space. Unfortunately, it skews mostly towards scammers and bad assets, because they're the ones that can't sell through traditional channels. There's plenty of ways to sell off pieces of pretty much anything if you actually have a good project or a good asset. So you're really not actually solving anything with this whole real world asset thing. So I don't have any problem philosophically with it, but what I would say is that it's attracting, a lot of the worst people on the planet to it, because those are most of the people that were doing crypto before. And before that, they were probably running scams with online gambling and ad tech. It's kind of the same crew of people that go from industry to industry, wherever the grift is.
Yeah, we do see that a lot for sure. And that's funny because I was literally going to be, my next question was, do you have any thoughts on Larry Fink's, the world's going to tokenize? And then the real world asset conversation jumped up. And you mentioned a great point there about the fact that if these markets are trading 24/7, the spreads can be ridiculous. It's just not exactly something that is going to happen. Not the way that maybe people think today. Do you have any thoughts on, and you mentioned you don't have a problem philosophically with it, the idea of like the average person wanting to be able to invest in a fractionalized piece of said hotel or said whatever the asset is specifically that they
so like timeshares?
Yeah, like what are your thoughts on that at all? Like how that plays out? Like I'm trying to figure out, because that industry in particular makes more sense to me then the
Have
meme
you
coins in some ways. But
ever in your life like driven by, this is always the pitch, right? And this goes back to 2017 at crypto conferences. Like, have you ever literally driven by a neighborhood and seen a house and been like, ooh, I wish I owned 1% of that? It's literally never happened, right?
interesting.
It's never happened, and you see these pitches, it's like, it's so transparently bad. I saw one, well, no, it's this one that crashed yesterday, right? The Ohm scam, right?
I saw
So
that.
these guys are like, you go to their website and they're trying to say, don't you wish you could own a piece of luxury things that you just can't afford, like Lambos and, luxury watches and Dubai penthouses? And it's like, obviously you guys are just buying shit that you get to use and getting other people to pay for it. It's so transparent and so hilariously bad. It's so dumb.
Is there, I guess, so the pitch is that if you buy into the hotel starts generating money, you get like the dividend payout. And in my brain, that was like, that makes sense if it works and if I can trust the platform. My one like fear was that,
like, it's going to be adverse selection, and they're going to do what Hollywood producers do, where they end up just loading it up with costs, and the movie makes 400 million, but somehow you as the investor, oh, actually it broke even because we had a lot of marketing expenses in Asia. They will always just hide the ball and keep the money. If it's not something that's actually in like an established, sort of transparent, regulated market, it's in the gray areas where it's not regulated that the people that want to rip you off, they flock to it, which is why they've been in crypto. Like, there's nothing inherently scammy about crypto. It's just that crypto existed outside of regulations. And so all the people that wanted to steal from other people jammed into crypto.
Wow.
Because that's where they can get away with it.
Right.
They seek out the gray zone because that's where they can get away with it. And so all these people saying that they wanted regulation the last 5-6 years, that's not true. There was regulation. They could have come in and registered with the SEC, blah, blah, blah. They didn't want to. They wanted to keep it unregulated as long as possible. And, and we'll see what happens now. They either wanted to keep it unregulated or to be able to write the rules themselves, which is what's happening now, because they gave 44% of the money to the campaign cycle. And now it's crypto lawyers actually writing the regulations in DC right now.
Yeah. What do you think about that? Like, we're about to see a different world for at least a few years. Depends how long these, I guess, stay in effect. But what do you think is do you think basically we got pro crypto president and then we got Trump meme coin. And I was just like, oh boy, this could get real out of hand, actually. And so now I'm a little bit nervous. Now there's a meme going around and it's like, bring back Gary. And I'm just like, dude, what? Oh, man.
Look, I think there will be disclosures. If there are going to be regulations and you're going to actually be, legal launching tokens, there will be disclosures. And any disclosures are bad for most of crypto. Most of the people that make money in crypto, any level of disclosure is bad. Any level of required disclosure, because the whole point is to not disclose and to obfuscate and to hide and to rip people's faces off. That's how you make money in crypto. You don't make money in crypto usually trading crypto. You make money by being an insider, right? You're supposed to get the tokens for free and then sell it for whatever. That's the whole point. So I think they're going to end up, it looks like Trump and his crew think that they're square now. It's like, thanks for the money. We're good. We did what we said, and, fight your own battles from here. And so now I think it's kind of the crypto industry, like going back and forth against the people that, either, some of the people that are fighting against crypto scammers are principled and some just want power.
Yeah.
There's both. And some people are a bit of both. Right. And so there are absolutely principled people that want to see disclosure and don't want to see retail's face ripped off by MLM scams and pyramid scams and token pump and dumps and things like that. And then there are also people that just want power and they're in the pockets of TradFi and they just don't want to see this stuff happen. Right. I do want to kind of end this on a little bit of a positive note. So going back to your question about BlackRock and, using things that they call, blockchain or tokenize this or that or whatever. I mean, that's basically just incremental improvements to financial IT. It has nothing to do with decentralization. It is better to update a blockchain, even a private blockchain, even one that's really just a database that has, basically a consortium of different companies or whatever collaborating, and they have private keys and they can all see the same state and be able to see that, it moved from this account to that account. That is a lot better than the system that we have today. It just is going to it's completely irrelevant to the continued decline in price of all of these altcoins versus Bitcoin over time, because you just don't need tokens for any of that. It's centralized, it's private, right? This private blockchain is again, I think the bull case for the entire crypto blockchain DeFi industry is incremental improvements to financial IT. That is the best possible thing that can come out of it.
You certainly gave me a lot to think about here in this conversation, Cory. I was going to ask the final question here, and you can take this either more into the direction of Bitcoin and Bitcoin specific companies, or more just like as an entrepreneur. But for people who are like, okay, I'm ready for something more. I want to get into this world, especially in the finance world, whether it's Bitcoin or TradFi or wherever they're trying to get into. Do you have any bits of advice as CEO? You've done most of the different things in your life as well. You've got a lot of experiences that you've racked up. Mm-hmm. Any bits of advice for me and other people who are looking to enter the game or looking for a little bit of perspective from you?
So I'll answer it in two ways. First, most people shouldn't be working in Bitcoin. The way that you can do that is by finding, the thing that you like to do that the world values the most and will pay you the most in excess of your expenses, and you store that money in Bitcoin. And you can still contribute to Bitcoin by educating and helping people and shit posting on Twitter, and you have a podcast with your buddy, and there's all kinds of things you can do in your spare time. But for you and your family and your descendants, it's your job to acquire as much Bitcoin as possible. So focus on that first. And if you really, really feel drawn to work in the Bitcoin industry, just remember that working on Bitcoin happens in every company. So you can be in like the finance department or be in management of some company that's then, buying Bitcoin into its treasury. You can work on Wall Street. All these banks and all these trading desks are working around Bitcoin and in Bitcoin. And you've got like, convertible ARB desks and, options traders. And, so it's all just becoming part of the financial system. There were two guys at BlackRock running the blockchain group, and they were Bitcoin through and through. They had wanted nothing to do with blockchain, crypto, whatever. And they basically steered BlackRock through the guise of this blockchain group toward Bitcoin. Right. Wow. And I'm not going to say their names, but a lot of people in the industry know who they are. And I spoke to them and their whole group a couple of times back in 2020 and 2022. And I like to think that maybe I helped just a tiny bit to steer that ship. But there are those groups, and there's a lot of people. There's a lot of people in crypto because crypto is the only one that paid money historically that are actually hardcore Bitcoiners, and their portfolio is 100% Bitcoin, including a lot of the people that run the top crypto funds and work at the top crypto infrastructure providers, and they're 100% Bitcoiners. And they've just, that's just how they make money. And I wish they would do something else, rather than crypto. But again, if we look back on this whole, kind of non-Bitcoin crypto bubble of, call it 2017 to 2024 or whatever that was, there will inevitably be some good things that come out of it, because you had, 100 billion invested and probably a few 100,000 people to a couple million people working on it that gained skills, and they coded a lot, and there will be some good things that come out of it. I just think it's pretty obvious that those things will not be reflected in the price of an altcoin denominated in Bitcoin.
Well, Cory, thank you so much. That was excellent advice. By the way, will you be at the Bitcoin conference in the end of May?
Yeah, we're doing a private client event for Swan clients one of those days. I think the Wednesday night. So I'll definitely come in for a day. Nice. But yeah, otherwise it's a bit of an S show for me. I don't want to be there for too long.
Right on. Well, I hope to see you there somewhere out there in Vegas.
Yeah, and, sounds good.
And I really appreciate your time. Thanks so much.
Yeah, my pleasure. Great job hosting, Cade. Appreciate it. Thank you.
We'll catch you in the next one, hopefully. And to everyone who watched the stream, we'll see you guys all later.